Welcome to Traders Lessons, your go-to educational trading company. Today, we will be diving into the fascinating world of the Bollinger Bands indicator. The Bollinger Bands indicator is a popular tool used by traders to analyze and predict price volatility. It consists of three lines on a price chart: the middle band, the upper band, and the lower band. The middle band represents the moving average, which helps identify the trend direction. The upper band indicates the resistance level and the lower band depicts the support level. When the price is near the upper band, it suggests a potential overbought condition. Conversely, when the price is near the lower band, it indicates a potential oversold condition. Traders often use Bollinger Bands to help identify potential breakouts and reversals. Volatility can be measured by the distance between the upper and lower bands. The wider the gap, the higher the volatility, while a narrow gap indicates lower volatility. Some traders also use Bollinger Bands in conjunction with other technical indicators to enhance their trading strategies.